Welcome to Managing Your Food Service Management Company Contract. This was originally presented at the Wellness and Learning Conference and again at the ASBO Best Practices Conference in 2018. It has been updated to reflect recent USDA guidance. I'm Catherine Hodges from the Department of Education, Office of Nutrition Programs and Services. This is the sixth in the procurement webinar series. So far, we have covered procurement basics, procuring locally, the procurement process, procurement in the real world, and focus on targeted issues. Now we will discuss what the responsibilities are when school food authorities decide to outsource the food program to a company per 2 CFR 200 guidance. Federal regulations require that every purchase made out of the nonprofit food service account be made using a procurement process, no matter how small the purchase is. The regulations do set out a different process for micro, small, and large purchases. Purchases under the small purchase threshold can follow the informal procurement method, which is simpler, but it is still a procurement process that must be followed. We will talk more in a bit about the informal and formal procurement methods, but first, let's talk about what the regulations are. Procurement regulations flow from federal to state to local. You should follow the strictest regulations that apply to you. If local or state regulations conflict with federal regulations, follow the federal regulations. 2 CFR 200 specifically requires that all entities receiving federal funds have a code of conduct in place that addresses the ethics surrounding their procurement process. Generally, this document is considered a policy and, as such, would have school board approval. They are also required to have written procurement procedures. These procedures should be detailed enough so that any reasonable person coming off the street could pick up the document and procure on your behalf. This document could have school board approval if they approve your procedures. It is not necessarily considered a policy. Please note that the SAU must have these two documents. They are separate from your food service management company's documents, who must also have them. Most contracts that I review specifically state that the FSMC will be following the SFA's code and procedures. If you do not have these two documents, what is the FSMC following? If your company is following their own code and procedures, have you received a copy so that you can ensure that they comply with federal regulations and that they are following them? As stated previously, the Code of Conduct is a policy that outlines the ethical behavior surrounding your procurement process. The written procurement procedures are how the procurement process will be handled following the guidance provided by the Code of Conduct. In the procedures, you would identify the small purchase threshold that you are following. The federal threshold has just been raised to $250,000. The state does not have a threshold that governs the local level. Therefore, you may follow the federal threshold or create one of your own. You would follow the most restrictive threshold. For example, your board has set a small purchase threshold of $20,000 and is allowing the use of the federal micro purchase opportunity, which has recently been raised to $10,000. Any purchases from 0 to $10,000, you may go out and make the purchase with no bidding process needed. However, any subsequent like purchases must be spread equitably around to all available and responsible vendors. Any purchases from $10,000 to your small purchase threshold of $20,000 is considered a small or informal purchase. You may contact potential vendors directly. The ideal is getting at least 3 bids or quotes before you make your purchasing decision, or 3 bids and a buy. Any purchase over $20,000 is considered a formal purchase. You may contact potential vendors directly, but you must also advertise the solicitation appropriately. The paper, the website, any industry publications as applicable. The point is to circulate your solicitation to as wide an audience as possible, upholding the first tenet of procurement, free and open competition. No matter the size of the anticipated contract, the procurement of a food service management company will be treated as a formal purchase. You must advertise the request for proposal and allow at least 4 to 6 weeks before the RFP closes. If you require a mandatory pre-bid conference or facility walkthrough, the 4 to 6 weeks calendar starts at that point. The vendor's responses must be evaluated according to the criteria listed in the RFP. The highest rated criteria must be budget. When you are evaluating the responses, the lowest bid automatically receives the highest points in this criteria line. That being said, the lowest bidder does not necessarily receive the contract. The RFP will be evaluated on multiple criteria: history, administrative capabilities, training, etc. Keep in mind that any guaranteed profit or surplus listed in the bid response is immaterial when evaluating the proposal. That would represent an over-response to the RFP, as you are not running a for-profit program. You are looking to break even. The procedures would also outline what you would do in an emergency situation. Always keep in mind that a refrigerator loss or hurricane can be considered an emergency. Just not getting to it or falling behind is not. Your procedures must include the outreach that will be done to ensure that small, minority, and women-owned businesses, enterprises, and labor surplus firms have the opportunity to receive your business. This is a civil rights issue and must be addressed for all of your small, informal, and formal purchases. No matter the type of procurement, everything must be appropriately documented. Specifications, solicitations, RFPs, invitation for bids, quotes, responses, evaluations, invoices, packing slips, etc., all must be kept for a minimum of 3 plus the current year. Remember, if your contract states that the company is going to follow your procedures, then you must have procedures in place for them to follow. If your contract states that the company will follow their own procedures, then they must provide those procedures to you so that you can be assured that they comply with 2 CFR 200 and that they are following them. It is not enough to say that you've hired a company and you don't procure, so you don't need a procedure. Of course you do. You would need to address, at the very least, the procedure that is used to procure the company's services. This list offers just the basic responsibilities of the SFA. It is not all-inclusive. One struggle that the state agency has seen in the contracting process is who is developing the contract documents. It is the responsibility of the SFA or SAU to develop the RFP, the contract, and each renewal. Please do not wait for the vendor to send you the next year's contract. It is not up to them to develop the document. Also, please make sure that the contract document includes all the programs that the vendor will be providing, including the summer food service program. Any renewal option must be received by the state agency before the existing contract document expires. Technically, you cannot renew something that has expired. Once something has expired, all renewal options originally available also expire. If you have everyone sign an unreviewed contract, you will probably have to go back out to get the signatures again, since there are tweaks required by USDA almost every year. While the state agency templates are updated with these tweaks, very few SAUs use the template. Therefore, each year's contract or renewal will need to be revised. And while it is not required that the state agency review the RFP before posting, it is required that they review the contract document before it goes into effect. It is best practice to run your RFP through the state agency before posting. It is up to the SAU to ensure that the food service is in conformance with the agreement with the state. It is also up to the SAU to resolve any review or audit findings. Monitoring must be an ongoing, active activity. Visit the kitchen, go through the inventory, stand at the register, review the menu, make sure donated foods are being used. All the things that you see the state agency doing, you should also do. Not only must the Food Service Management Company keep current on the guidance provided in USDA memos, you, the SAU, must be as well. Monitoring must be documented. Sample documents can be found in the USDA Guidance Manual, Contracting with Food Service Management Company Guidance for School Food Authorities, 2016. Monitoring is not just eating lunch in the cafeteria. The SAU is responsible for making sure the quality of the meals served to their students is maintained, that the prices charged are the prices approved and set by the SAU, that the nonprofit food service account is maintained per regulation, that the Food Service Management Company is returning all discounts, rebates, and credits to the SAU, and that only allowable costs are being paid from the nonprofit food service account. The SAU must retain all signature authority on FSMC, processing, and any other contracts, on free and reduced income applications, on the agreement with the state agency, as well as the application and claim submission. The SAU is responsible for the free and reduced determination, as well as the verification process, including the hearing process when applicable. The SAU receives USDA donated foods, generally known as commodities. The Food Service Management Company must use these foods in the provision of running the meal service for the SAU to the greatest extent possible. It is the SAU's responsibility to ensure that this happens. The SAU retains the title to these foods. If the SAU has sent donated foods off to be processed, the SAU is the responsible party on the processing contract. They must ensure that they receive any and all refunds from the processors. The SAU must also ensure that the Food Service Management Company has credited the SAU for the value of all donated foods received in the school year. The SAU must maintain health certifications for each of their sites. Each site is required to have 2 inspections per year. If they only have 1 inspection, that is up to the SAU to request the second. The request must be documented and the response retained in the inspection files. The SAU must establish an advisory board of staff, parents, and students to help guide the Food Service Management Company in the development of the menu. In the RFP process, the SAU can either develop a 21-day cycle menu for potential bidders to bid on, or they can have potential bidders submit suggested 21-day cycle menus for the SAU to evaluate. If the SAU has bidders submit the menu, the evaluation criteria in the RFP must be clear. The SAU is responsible for the submission of the claim to the state agency. While a Food Service Management Company employee may enter the claim, the SAU must submit. It is the SAU's responsibility to submit all reports by the deadlines established by the state agency and/or USDA. It is also the SAU's responsibility during the contract and renewal process to verify the status of the vendor and their ability to receive payments using federal funds. This is the suspension and debarment certification that is included in each contract renewal. The debarment certificate is to protect the integrity of government programs by ensuring that only honest, ethical, and otherwise responsible persons and companies participate in the federal program. A suspension excludes or disqualifies a person or company from bidding on, receiving, or participating in federally funded contracts or grants for a temporary period of time pending the completion of an investigation or legal or administrative proceeding. A debarment excludes or disqualifies a person or company for a specific period of time, generally not longer than 3 years. Both have government-wide effect that applies to all federal programs and procurement. Here are some questions to answer while you are monitoring your company. Have they adhered to the cycle menu? If the menu has been changed, was it changed with your permission? Does the menu currently adhere to the meal pattern? Have you kept up with the changes regarding whole grain rich products, serving sizes, and vegetable subgroups? When you receive the claim to submit, are you reviewing the documentation that was used to enter the claim numbers? Is that documentation a valid report from the point of service system? When you receive your FSMC invoice each month, is it a single-page invoice with an additional attachment of all the receipts for the month? What process do you have in place to review the receipts to verify that only allowable costs are being billed to you? What process do you have in place to reconcile the receipts with what is being paid so that you agree with the reconciling invoice at the end of the year? Are you able to recognize if additional meals are being served that are not eligible for claiming? For example, the number of adult meals served, or seconds, etc. Can you follow the deposit from the point of service drawer to the counter to the bank statement, and finally to the general ledger? Can you follow a catering event from the invoice to the payment, etc.? Can you match what was claimed to what was received as reimbursement? Are catering events allowed per your contract? Are catering events happening in your space that you are not aware of? Is the food service management company prepares any of your food at an off-site facility? Has that off-site facility received the appropriate health inspection? Have the employees of the company met the applicable number of training hours each year? If they have not, how are you handling this? Have your employees working within the meals program received an appropriate number of training hours? If they have not, how are you handling this? Is there a new food service director in your facility? Did they meet the professional standards requirements for your size SAU? If they did not, how are you handling this situation? If they were hired without the qualifications required by USDA, their salary and benefits cannot be paid for via the federal program. Everyone working within the meals program must receive civil rights training annually. Has that happened? Is the "And Justice for All" poster located in a publicly visible location where the meals are served? Is that location on the correct side of the meal service line? Is the company making appropriate accommodations for students with a special dietary medical statement form on file? Is the serving line clean, attractive, rodent-free, insect-free? Is the staff practicing appropriate personal hygiene, washing hands, using gloves? Are leftover foods cooled, stored, and labeled properly? Are temperatures monitored and recorded prior to serving food items? Is there a food safety plan based on HACCP principles in place, with standard operating procedures implemented and being followed? Is the back door closed and locked? Have all the employees been trained to the SOPs? And has the training been appropriately documented? How are the meal counts taken? Is the counting method accurate and consistent? If a manual method is used, are the counts verified by a second party? Are the counts documented and maintained? Have the point of service employees been trained on offer versus serve? Has the training been appropriately documented? Do the POS employees recognize a complete, reimbursable meal accurately and consistently? What do the menus look like? Is the meal pattern being followed? Is it being served? Are all supporting documentation maintained? Things like production records, recipes, food labels, child nutrition labels, and product formulation statements? Does your vendor complete the menu worksheets that can certify if the menu is compliant? Do the menus meet the needs of the applicable age grade group? Do the menus meet the vegetable subgroups requirement? Are all grains served to students whole grain rich? Is the maximum amount of USDA donated foods being used? Are these foods being handled properly? Are they secure? Is the company practicing FIFO, first in, first out? Are there products in the inventory that are gathering dust or past their expiration date? This certainly impacts your program's bottom line. How are the deliveries of goods being handled? Are the items coming through the door inspected and signed for? Are they immediately stored in the appropriate location? Are chemicals received and stored properly? Are temperatures being recorded for all the equipment in the kitchen area, including those that don't necessarily belong to food service? How long are the temperature logs maintained? Is the district or SAU informed when equipment needs maintenance? Are cashiers trained on proper cash handling? What happens with out-of-balance drawers? Is there a meal charging policy in place? There should be. Is it being followed? How is the cash taken in, the deposits, the bank statement, and the POS reports reconciled, and by whom? How are discounts, rebates, and credits reported to the SAU? How is the SAU verifying that all are being returned? Who is responsible for contacting households about negative balances? If it is up to the FSMC, are they doing it? If it is up to the SAU, how is this information communicated from the company to the SAU? How are employees trained? How are the trainings documented? Is it easy for the SAU to verify that all the FSMC employees have received the appropriate number of training hours? Can they clearly identify how many training hours are actually needed for each employee? Does your contract state that the vendor will be providing you with their code of conduct and written procurement procedures? Or does it say that they will follow yours? If they are following yours, do you have these documents? If they are following theirs, do you have a copy of the documents, and can you confirm that they are following them accurately? I know that your contract with the vendor stipulates that they will abide by the Buy American regulations, but are they? If the product does not have a country of origin as the USA, then does the vendor have the proper exception documentation on file? Do their contracts with their distributors stipulate compliance with Buy American regulations? Have you looked and confirmed? The SAU is held to all the federal requirements. Keep in mind that the federal funds are flowing directly to you, not to the vendor. It is you who hold the contract with your vendor. It is up to you to make sure that the provisions of the contract and the federal regulations are met. If there is a fiscal finding through your administrative review, and the finding had to do with the meal served or how it was served, then, per your contract, this fiscal finding is the responsibility of your vendor. It would be up to you and your legal counsel to decide if the vendor is to refund you for the meals taken back by the state agency. For any breach in contract provisions, you need to go to your attorney to handle that breach. However, if the fiscal finding had to do with eligibility determination, that finding is the responsibility of the SAU, as the implementation of the free and reduced policy is up to the SAU and cannot be delegated to the vendor. If you have a food service management company employee act as your determining official, there must be an SAU employee acting as the confirming official on every application prior to sending notice of eligibility to the household. This SAU employee would be more than a signature. They must recalculate the determination and confirm that it is accurate. Please feel free to contact us with any questions regarding managing your food service management company contract. Thank you.